Is your hard-earned money sitting idle in a regular bank account, barely keeping up with inflation? Or perhaps you're looking for a relatively stable alternative for short-term investments, but the sheer number of options feels overwhelming. The truth is, not every investment has to be high risk. Did you know that there are debt mutual funds designed for almost every investment duration, from just a single day to several years? Welcome to Geojit Spotlight. Today we are diving deep into the world of debt mutual funds. Based on recent analysis, Geojit has identified top-performing debt funds across various distinct categories. In this video, we will decode each major debt fund category, explain exactly who it is suitable for, and share our recommended schemes along with one-year compounded annual growth rate or CAGR. So let's get started. Our first category is overnight funds. As the name suggests, these funds invest in debt and money market instruments that have a maturity for just one day. For this category, the recommended fund schemes are Bajaj Finserv Overnight Fund Regular Growth, which has delivered a one-year CAGR of 5.34%, and Axis Overnight Fund Regular Growth with a one-year CAGR of 5.33%. Next up, we have liquid funds. These funds invest in debt and money market securities with a maturity of up to 91 days. While liquid funds cannot be viewed strictly as wealth building investments, they are an excellent way of parking your funds with relatively low risk. The recommended schemes are Mahindra Manulife Liquid Fund Regular Growth, showing a one-year CAGR of 6.21%, and Bajaj Finserv Liquid Fund Regular Growth with one-year CAGR of 6.11%. Our third category is ultra short duration funds. These funds invest in debt and money market instruments where the Macaulay duration of the portfolio is maintained between 3 to 6 months. Who should invest? If you have a specific financial goal or a known expense coming up in about 3 to 6 months, this category is ideal for matching that short duration. Our recommended schemes in this space are Mirae Asset Ultra Short Duration Fund, Regular Growth offering one-year CAGR of 6.27%, and SBI Ultra Short Duration Fund Regular Growth, which has a one-year CAGR of 6.01%. Next is low duration funds. These funds invest in debt instruments such that the portfolio's Macaulay duration falls between 6 to 12 months. This category is perfectly suited for investors who have an investment horizon of roughly 1 year and are looking for a short-term investment that matches the specific duration. The recommended schemes in this category are Tata Treasury Advantage Fund Regular Growth with a one-year CAGR of 5.84%, and Axis Treasury Advantage Fund Regular Growth standing at a one-year CAGR of 5.99%. Our fifth category is money market funds. These schemes specifically invest in money market instruments that have a maturity of up to 1 year. Much like low duration funds, they are ideal for short-term investments where your timeline matches the duration of the portfolio, typically up to 1 year. Our recommended schemes are UTI Money Market Fund Regular Growth, delivering a one-year CAGR of 6.10%, and Tata Money Market Fund Regular Growth with a one-year CAGR of 6.08%. Let's move to a slightly longer horizon with short duration funds. These funds invest in debt and money market instruments where the portfolio's Macaulay duration is between 1 to 3 years. This is a great category for conservative investors who are looking for alternatives to traditional bank fixed deposits and have a slightly longer time horizon to keep their money invested. The recommended schemes in this category are HDFC Short-Term Debt Fund Growth, showing a one-year CAGR of 5.38%, and Axis Short Duration Fund Regular Growth with a one-year CAGR of 5.45%. Now, for something slightly different, conservative hybrid funds. Unlike pure debt funds, this is a hybrid category. It invests between 10% to 25% of its total assets in equity and equity-related instruments, while the heavy lifting, 75% to 90%, is done by debt instruments. If you are a very conservative investor who primarily wants fixed income stability, but also wants to taste the benefit of limited equity exposure to potentially beat traditional fixed income returns, this is for you. Our recommended schemes are Parag Parikh Conservative Hybrid Fund Regular Growth, which has a one-year CAGR of 4.49%. Next, we look at dynamic bond funds. You may view this as a multi-cap fund of debt category. These funds can invest across various durations. The fund manager has the flexibility to actively choose to invest in any paper, changing the maturity profile based on their interest rate outlook. Because of this active management across all maturities, it is considered a fund manager's fund, and importantly, it is one of the relatively riskier schemes among debt funds. The recommended scheme is ICICI Prudential All-Season Bond Fund Growth with a 1-year CAGR of 4.27%. Finally, we have medium duration funds. These invest in debt and money market instruments with a macular duration between 3 to 4 years. This category is ideal for investments where your personal time horizon matches the 3 to 4 year duration. Keep in mind, as the duration of fund increases, both the potential return and the underlying risk increase as well. Our recommended scheme in this category is ICICI Prudential Medium Term Bond Fund Growth, which delivered a 1-year CAGR of 6.46%. That said, it is important to remember that a fund's past performance does not guarantee future returns, as market conditions and the financial landscape are constantly evolving. As an investor, you should choose your funds that align with your investment horizon, risk appetite, and financial goals. To make informed investment decisions, we strongly recommend consulting a certified financial advisor. If you find this video informative, please hit the like button, share it with your friends and family, and leave a comment if you have any questions. Most importantly, don't forget to subscribe to Geojit Spotlight for more in-depth financial insights. Thank you so much for watching. Stay informed, stay invested, and we'll see you next in the next Geojit Spotlight video. Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.